What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips, but more specifically, how you can use a proven and repeatable strategy to make money every day. This channel focuses on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but this trading and charting method can be used to trade any company that is publicly traded. Make sure you hit that subscribe button and the notification bell to make sure you're notified when we release new videos. And if you want more details about the strat, which is the basis of our trading and charting method, there's a free document in the link, in the description to this video, as well as links to other information about the strat. Basically, it's the easiest way to read price action, the simplest way to understand where price action is at and where it's going. So just looking at today's notes, we will do a recap of today's intraday price action and look at the QQQ internals. Then we'll take a look at the week, month, quarter, and year charts for SOXL. And lastly, we'll set our 4-hour markers and our triggers and targets for tomorrow. And we'll review the triggers and targets for the week, month, quarter, and year. So just getting into the charts, we'll look at the internals first. At the bottom left, we've got vol QD, which is basically money coming in versus money going out. On the bottom right is ADQD, which is a measure of breadth. And the tick Q at the upper right is a quicker moving measure of breadth. The upper left-hand corner of the grid is SOXL's price action for today on the 5-minute chart. So you can see vol QD opened up at the zero line, but quickly money started flowing in. Breadth was negative, very negative, in trend lowers on it, basically, and what that means is that the money was concentrated in a specific sector or into specific stocks in QQQ. Luckily for SOXL bullish traders, that sector was the chips, right? So AVGO gapped up. Nvidia didn't gap up or even actually run up right at the open, so they were kind of out of play. But AMD, Texas Instruments, Qualcomm, Marvell, Micron, they all either opened up and continued pushing up or opened flat and pushed up immediately. So that's where you see price action for SOXL, moving up, making these higher lows and continuing to move up through these Fibonacci extensions and running into this daily broadening formation. If we look at it from the larger chart here, here's again the 5-minute chart, and just bringing into view the 4-hour markers, right? These are the markers that we put on our intraday scalping and day trading charts every day. This is what gives us our consistency and repeatable method, right? So we've got previous high of day, we've got overnight high, which is right here at opening print, and then we've got overnight low and previous low a day. Honorable mention are the 4-hour trigger to the downside and 4-hour trigger to the upside. So our general rule is once we get our opening print or the first price for the day, we mark it and we look for higher lows above opening print to get into calls, and we look for lower highs below opening print to get into puts. And once a direction is determined and you enter, your targets are the other 4-hour markers, that are in the direction that price action is going. So here we would have, price action opened above overnight highs, so that's kind of out of play for calls. But then we got our higher low above previous high day. So unless you had swings over the weekend or you just entered calls at open, previous high a day really wasn't a target for you either, right? What we did get is the higher low above opening print, which also happened to be above previous high day, and you enter calls there. You continue to move up, you get the higher low here, so your stop should be somewhere slightly below the higher low. That way you don't get stopped out too easily if price action does get around this level and you do get a higher low here. You don't want to get stopped out. So we did get the higher low. You continue to move up. You see the level that we're running into is last week's high, this 34.14, this purple line. And then we have the fib extensions here, the 161.8 fib extension. This is from the September 17th gap and go. So last Thursday's gap and go. This is the 161.8 fib extension. So by this time, you're about an hour and a half into the market. You definitely want to make sure you're looking at the other time frames anyway. But at this point, let's get the right day in here. So at this point, you do get your higher low here. and a soft higher low, and you push up to at that point the high of the day. But then you do get the lower low here, so you could exit at this point, entering down here obviously, or your higher low here above or right at previous high of day. You do get the move up here, and then you exit out here. You can leave some runners, just because from the hour perspective, you haven't put in any higher lows or lower lows from that perspective. Depending on what your expiration is, we don't like to buy same week. We like to buy at least 1 week out, so that gives you a little bit more to play with there. But at that point, you kind of hung up here. Some might call this a bull flag. I just like to call it bullish consolidation. And you can see that at the end of the day, we did have a little bit of a taper off, which is expected. It's another basically taking a breakout level. So we broke out from here. We didn't get a retest there, but we're getting another breakout here once we got to this level and kind of hung around. We broke out once again, and we got the retest, the second retest. Now they say the more times you test a level, the weaker it becomes. So we could look for continued action to the downside tomorrow. But just from the 15-minute perspective, that wouldn't be all that bad, right? It could give you a 3-2 down, and then you get a 2 up with the next 15-minute candle. And then they were targeting the high of this 3 once again, which would break this 15-minute downtrend line. So that's how things look from an intraday perspective. Let's take a look at things from the day. And we can see, what's going on with the chart? There we go. From the day, we did end up locking in yesterday as a higher low, right? So today's price action went above yesterday's price or Friday's price action, locking in this 2 down as a higher low, continuing the trend to the upside. Again, here's last week's high. We've broken above it. We're running into this daily broadening formation. So tomorrow, if we get more upward price action and we break through the daily broadening formation, we do have to make sure we keep in mind this market maker's expected move high, the 36.03. If you're not familiar with this level or the market maker's expected move, make sure you check out our weekend video where we go into a little bit more detail and where we get that number and how we put it on the chart. But we've got the expected move high for the week of 36.03, expected move low of 30.01. Again, 30.01 is not in play right now. We're not pushing to the downside. And we would have to contend with last week's 50% before we even get to that level. But since we're pushing to the upside, if we do break through, you can see like Thursday of last week, we broke through this daily broadening formation here, but we pulled back in on Friday. So do we get the same type of thing tomorrow where we break through, maybe hit the market maker's expected move high, and then on Wednesday maybe we get a push back down, maybe get another higher low here, just testing last week's high as support instead of resistance. But we could come back down and make a lower low, really creating a broadening formation at that point from a daily perspective. So from the day, we're looking pretty good. Nothing to really worry about there. Just want to keep in mind, we got the gap below, and we do have this breakout point. So a lot of times, most of the time, breakout points are retested as support. This was resistance before. You can see this level up here is resistance. We finally broke through. Yeah, I guess you could call that a test where we went through and went back up. But I would expect more of a test. Doesn't necessarily need to be in the next couple of days. It could be later on when we get say we get another 10-20% pullback like we did earlier in April, or leading up to that April 7th low. But that is a level that we want to keep in mind. So again, things looking pretty bullish from that perspective. Let's look at the week, and let's get up a cleaner chart here. Oops, let's bring out the broadening formations for the week. All right, so we can see we've pretty much broken through this weekly broadening formation. We want to keep it up there because this could say the end of the week goes bad and this turns into an inverted hammer or something like that, and it pulls us back in. We want to keep that level as a level of note, right, of previous price action. You always want to keep those broadening formations in mind without clogging up the chart. So again, we're getting bullish movement, right? We've got higher lows here from that perspective, or held these lows here and got the breakout. We've gotten above this lower high that was in the downtrend to April 7th low. So we're looking to get this higher high now, and that's that 36.15. That number will start ringing bells, kind of like that 30.55 did, which was the 61.8 fib of the 2020 run up. But basically, we want to keep this 36.15 in mind. That's going to be a target on a lot of different time frames. If we do break above that 36.15, then we've got this gap that we can try and grab from. It's on the day chart, and then test this weekly broadening formation here, which is more along the trend of what we were. The way price action was moving from this April 7th low. So again, things looking pretty bullish from the week perspective, from the month perspective. Goodness me, sorry about these charts here. From the month perspective, still looking really good, right? We got the bullish engulfing candle last month, and then we got the continued push up, right? So while we did push up and we flipped the year green, so we've got, if you look at the upper left-hand part of the chart, we've got the time frame continuity indicators where we've got the month, the quarter, and the year. They're all green. The week is green as well, but we broke through this year flip to flip us green. Now, as we did that, we left some gaps could get filled. We want to keep those in mind, but right now it's looking very bullish. We've triggered this 3 combo 2 down, combo 2 up, targeting the high of this 3, which is that 36.15, which is that higher. Again, that 36.15 should start to be locked into people's minds as the next major target that we want to get to. All right, from the quarter perspective, again, just want to bring this up as well. We're almost to the end of the month, so it's getting kind of moot, the point of the seasonality, right? I don't know if it was pushed forward into, that April drop, or if it's being pushed back, and we're going to see something in fourth quarter where tech stocks don't perform as well, or maybe we just ignore seasonality this year. But right now, we do want to keep in mind that September, October are the worst performing months for tech. So this big 2 up, hey, we could start pulling back down at the end of the month, right? We want to stay above last month's price action. That would still, keep it pretty bullish. But if we into last month's price action, that brings back on the table, the possible 3, 2 up, 2 down from the month perspective, which could push us back down, possibly fill this gap, testing last year's low, testing the month and quarter flip, just not bullish, right? So we just want to keep that in mind. From the quarter perspective, let's go ahead and zoom in a little bit here, right? So we're in force with the 2 down, 2 up. We're targeting the high of the candle to the left of the 2 down. So that's that, once again, 36.15, right? So that number should start really being ingrained in your mind, 36.15, 36.15. Now, if we reach that 36.15 and we breach 36.15, meaning we go above 36.15, what that does trigger from the quarter perspective is the 1 combo 2 down, 2 up. Now, when you get a 1 2 down, 2 up, or a 1 combo 2 down, 2 up, the trigger is the high of the 2 down. So in this case, this is the combo 2 down. This is that high, that 36.15. And the target or the magnitude of that move is the high of the candle to the left of the 1. So it's not just the high of the 1, it's the high of the candle to the left of the 1. And again, this is broken down in that very simple PDF that I displayed earlier. Again, this is just the easiest way to read price action. So if we do breach this 36.15, magnitude technically would be 70.08. Do we reach it this quarter? Probably not. Do we reach it next quarter? Probably not either. Maybe second quarter, maybe third quarter. I'm not going to get into predictions. All I would know is that the strat has triggered, and as long as it's in force, I would want to stay in my long-term calls, right? So from a quarter perspective, still looking very bullish, and from the year, we've really turned things around, right? Because the year did not look good at one point, and well, it was why we were able to capitalize on selling calls and buying puts leading into that April 7th low, because we had the 1 2 up last year, and then the 2 down triggered this year, right? So the 2 down triggers once we go below last year's low, that 23.50, and again a 1 2, it's just the reversal of the 1 2 down 2 up, right? This is the 1 2 up 2 down. So the magnitude is the low of the candle to the left of the 1, not just the low of the 1, but the candle to the left of the 1. So that's this 621. Now we didn't quite reach it. We got to the 723 on April 7th, and seems as though, from that perspective, we've fulfilled that strat, right? We didn't reach all the way to magnitude. What we did is we left something kind of bullish on the board, really, is we made a higher low, right? So there's 621, 723, higher low. Also, we're a green hammer now. Again, the year is flipped green. We're no longer red, so that's even more of a bullish signal just from pure candle structure, where it's a green hammer. So that's, again, a bullish signal. And then again, next year, if we go 2 up, or price goes above this year's high, then we trigger the 2 down, 2 up, and that targets, or the magnitude is the high of the candle to the left of the 2 down. And so it's this candle, which is the 2023 candle, with a high of 70.08. So the magnitude for next year's move, if we trigger the 2 down, 2 up, is 70.08. All right. So I think I've talked about the long term or the higher time frame stuff long enough. People are ready to get into triggers and targets. Let's look at tomorrow, and just brought this up as an example. Let's get back to where we need to be. There we go. And just as an example for tomorrow, we've got today's high of day. We've got what's right now the overnight high. We've got overnight low. What's right now overnight low. And then we have, let's get it on here. Where's previous low of day? Come on. There we go. Previous low of day. All right, so there's our 4-hour markers for scalping and day trading. Previous high of day, overnight high, overnight low, previous low of day. All right, so say we get price that opens here at 34.33, this price level 1. We're looking for higher lows above opening print to get into calls. Once we do that, we're targeting overnight high first, and our second target is previous high of day. All right, this is a repeatable strategy. If we're going to be getting puts, that means we would get price opening here, a push down, a push back up. And once we get our lower high here, then we want to enter puts. First targeting overnight low, which doesn't give us a lot of magnitude, so the next target would be previous low of day. Now, because that is such a big move in the face of the bullish trend that we're in, we want to put in a couple of intermediate targets, right? And so we've got these fib extensions that are coming back into play from this September 17th gap and go. So your first target would be that 34.19, which falls in line with the 34.14, which is last week's high. So we could just be finding support there for the bounce. But then we've also got this 33.91 and 33.64, which are the 150 and the 138.2 fib extensions. We've got this weekly broadening formation. So if it doesn't just drop straight through, we could just get a slow, controlled move down. And any of these levels before we get to previous low of day are valid levels of reversal, right? So it doesn't mean that they're going to reverse here. It doesn't mean you need to get out of any puts that you have here. But what you want to do is you want to continue to watch the price action and then determine what you need to do from there. Do you stay in until we get previous low of day, and then do you maybe exit there with most of your position and leave a couple runners? See if we get any lower for our lower targets. That would be up to you. But for right now, that's how you would play, from a scalping perspective. Looking for higher lows above opening print, targeting overnight high and previous high of day. Looking for lower highs underneath opening print to target previous low of day, and then overnight low and previous low of day. Right? If we want to look at it from a more of a day trade perspective, let's go to the 4-hour chart, and let's get you a different chart here. Let's go swing. All right, so from the 4-hour perspective, we would have, if we get price action to the downside, a 2 up, 2 down, triggering at the low of the second 4-hour candle from today. So that's 34.36 with the magnitude of 33.19, right? If we get price to the upside, we don't have a reversal, so we don't have a magnitude, but we have a trigger. That's today's high. If we go higher than 34.75, then we're looking for 36.03 as probably a more ultimate target for the day. But intermediate targets, we can look at those fib extensions. So if we just switch to our notes real quick, we go up and we look at our 4-hour, again, we would have a 2 up, 2 down, triggering at 34.36. Would have a magnitude of 33.19, but again, in the face of the bullish momentum that we have, that's a pretty big move. So we have some intermediate targets of 33.91 and 33.64, which are those fib extensions of the September 17th gap and go. If we go to the upside, we have a 2 up, so a trigger but not a magnitude. We've got trigger of 34.75, and just from previous price action and Fibonacci extensions, we've got 35.07, 35.50, and 35.95 as our targets. Right, so that's from more of a day trading perspective. If we want to look at a swing, let's go to the day chart. And we can see we set a higher low. Again, we talked about that earlier. From the day perspective, we set a higher low yesterday, or I guess it was locked in today. But that Friday's low was a higher low. So if we do get another reversal to the downside, if we do get price action that goes below today's low, that 33.20, that's the trigger. The magnitude of that move is the low of Friday, which is 32.12, right? That's also the top of the gap. So if you want to exit most of your position, leave some runners for a gap fill or just a further probe into the gap, maybe a bounce off of last week's 50% line, perfectly reasonable, right? There's a lot of thin structure, gap, could go all the way back down and test market makes expected move low, which aligns up with last month's high, this 29.66. So those are your triggers and targets to the downside. To the upside, again, we would have, if we get above today's high, 34.75, we're looking at 36.03 as our target, and we've got some extended extended targets for you out here too as well. So again, from the to the downside, 2 up, 2 down would trigger at 33.19. The magnitude is 34.12, but in the face of the uptrend, we do have 32.89 and 32.60 as intermediate targets. To the upside, we would have a 2 up, 2 up, so a trigger but no magnitude, trigger at 34.75, but we do have extended targets of 35.50, 35.95, and 36.15. Remember that 36.15 coming into play being the higher high on the week perspective. Looking at the week chart, let's pull up the week. Again, we triggered the 2 up, so it no longer a threat of the 2 up, 2 down. There is, the threat still of a bearish engulf or a red 3, but right now that doesn't look like it's really going to happen. So we've got the 2 up targeting this higher high on the week perspective, that 36.15. So just going back to our notes, we've again triggered the 2 up, 2 up. That's why it's bold and underlined. It underlines once it triggers, and it's bold if it's in force. We're in force because we're above 34.14, and we've got our triggers of 35.07, 35.95, 36.15, and 38.45. If we do, we made to make that a red 3, would have to go to 28.92 to trigger that. So probably not on the board, but just something you want to keep note of. Again, from the month, we triggered the 3-2 up. We're in force because it's above 29.06. We've hit 2 of our targets already. So now we've got a couple more left, 35.95, 36.15. Again, that 36.15 coming into play again, like on the week and on the day. And then the 41.19, which is a higher high on the week and month perspective. The quarter, again, triggered the 2 down, 2 up. It is in force. That's why it's bold and underlined. It triggered at 25.84. It has not reached this magnitude yet, but we're getting close. That 36.15, which again plays into the month and the week and the day, that 36.15 is the magnitude for that move. If we do reach that 36.15, remember that triggers the 1 combo 2 down, 2 up. Ultimately with the magnitude of 70.08, but starting off with some extended targets of 38.89, 42.04, and 44.54. Again, on the year, we have to leave this 1 2 up, 2 down underlined because it did trigger. We did go below 23.50, but we did not reach magnitude. And as we can see, we are back green with this indicator up here showing that it would flip red at 28.13. So as long as we're at above 28.13, the year is green, and things are more bullish than bearish at that point. So that's it for today's video. I hope everybody enjoyed it. I hope it wasn't too long. I hope I didn't ramble on too much, but I did want to get you as much information as possible in as short amount of time as possible. So if you want anything as far as the charts is concerned, go ahead and rewind. Otherwise, I'll leave it on the triggers and targets tomorrow. That way you can pause it or do whatever you need to do to get your triggers and targets written down or locked in or wherever you need to put them for tomorrow. Again, this is just using our trading method and strategy, so we're not telling you what to do. Again, take all of this with a grain of salt. Make sure you back test this trading method and charting method that we use, and use your own judgment and your own risk tolerance to make the plays that you want to make, right? So these are, you don't need to enter any of these just because any of them trigger. You don't need to take any of these to the magnitude or the targets that we've listed. This is just showing you how we set up our trading and charting. So again, if you like the video, give it a thumbs up. It really helps the channel grow. We're not selling anything. We're trying to give out as much free information as possible without taking up too much of anybody's time, yours or mine. So just want to get this information out there. A thumbs up goes a long ways though. So if you want more information about how we set up our charts or how we get into our precision trading, check out the bonus content on our YouTube page. There's a couple of videos out there that can be really helpful to people, especially if you're just starting out with trading or charting. So encourage everyone to go check it out, even if you're not just starting out. It might open your eyes to a few things, or you might be able to leave a comment on one of the videos and let me know where I might be going wrong in your mind, right? So free information, just as much as we can provide. I hope everybody gets some good rest tonight, wakes up refreshed tomorrow, has a good day of trading tomorrow. Use your strategy to your advantage, be disciplined, and if you do that, you can go a long way. So look forward to trading tomorrow and seeing everyone out there.